Hello guys and welcome to the 98th edition of the Trading Opportunities webinar. Before we continue, let me check if the webinar is being broadcasted at my end. All right, looks like it is working fine. In that case, guys, let's begin. Before moving any further with the webinar, here's the disclaimer. Basically, all content presented here is for educational purposes. Is not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the disclaimer you can read by pausing the screen right here or visiting 50eyes.com/disclaimer. So with that being said, let's now head over to the introduction, guys. So as you know, my name is Nirav. I'm the admin and owner of the website 50eyes.com as well as the YouTube channel 50eyes Market Analysis. And this is the 98th edition of the Trading Opportunities webinar. Basically, we have been conducting these webinars one second. Let me take care of this. Yes, that's fine. So we have been conducting these webinars on a weekly basis. They are conducted every Friday. And the timing is always 2 PM GMT or 7:30 PM IST. So whichever time zone you are in, you can just convert it to your particular time zone. And in the past webinars, like the past 97 webinars, we have captured a total of 208 trades. That is 3 of the setups we discussed in the 97th webinar played out. And adding the remaining, or what you call previous 205 trades or setups, which we have discussed in the past webinars, we have a total of 208 setups that have played out as per analysis. Keep in mind, this webinar, along with all others, have been broadcasted live on YouTube. And this one is also broadcasted live on my LinkedIn page. So everything is done in front of you guys. Next up, I'll just like to show you the forecast accuracy, which we have compiled for all the previous years. Since 2016, I've been keeping a track record of things: 83.34% in 2016, 2017, 87.5, 2018, 84.61, 84.88, 2019, 2020, 88.52, 2021, 82.22. So basically, till 2021, we were doing these on a monthly basis. Then we started doing once per week. Actually, in the beginning, I was doing 3 per week, reduced the timing to once per week. And we have kept or had an accuracy of 80% plus for 6 consecutive years and still going on. Right. So this is above industry standards and it's all publicly done. You can check the date of the webinar, the name of the instrument discussed. The analysis is also written down here for your convenience to read. And you can also verify everything in the video itself. And this is the outcome of analysis. Right. So with that being said, let's now move over and discuss the format of these webinars. So the format will be the same as every other webinar. We will discuss the chart of Euro USD first, followed by the chart of crude oil, followed by gold, S&P's 500, Nifty 50, and in the end, we will discuss Bitcoin. Right. The webinar, once complete, is available on YouTube as a recording. You can just go to my YouTube channel, 50 Eyes Market Analysis, click on live section, and just click on the 98th webinar. Or if you want to check any past one, just click on that. It is also available on our website, 50eyes.com. If you scroll down or just click on market analysis, you can also see it there. But if you just scroll down, it will also be published here, 98th. Right. And lastly, if you want to see the updates as they are pushed in our private Slack group live during market hours, then you can also contact us regarding the same by visiting 50eyes.com/contact-us and selecting the subject matter as requesting details. So with that being said, let's now head over to our webinar now. So let's first of all, what's going on here? Okay. So I'll check that later on. Let's now head over to the webinar and discuss start discussing our analysis with the first chart being Euro USD. Not this one, this one. So before looking at what's going on right now, let me quickly check what we discussed in the last webinar on Euro, and then we will take things from where they are right now. So here is the recording from the previous one. Let's just quickly open it and see. So this is, as you can see, is the recording from the last webinar. And let's just quickly check what we were seeing on the chart of Euro USD around here. Yes, so this was the setup we were expecting, that this market is going to head up as an impulse, one up, two down, and then head next leg up as a wave three, of course. And I was also long on this counter, right? So that did not go as planned. My stop loss was hit, and then I had to later on reverse the position to shorts, which, by the way, is still playing out. The count is still playing out. But that was what we discussed. The market was at around 1.09588, and expectations was that it will go upside. Now let's check the actual chart to make things clear. So this was the discussion. Last time was 12th January, somewhere here. Expectation was like this. However, what happened is in front of you, the market went down, right? And somewhere here we had our stop losses placed. I believe it was lesser than this level, around 1.0912. So at that point, the stop loss was hit, and I reversed the position to shorts at there or a little bit lower. And there were some scalp shorts I could take at that point. And before discussing the analysis, I think I can as well show you the, what do you call, post here on Slack as well. So alternate view updated position reverse to shorts on January 16th, right? And then stop loss was 1.0988, etc. Alternate view in orange, etc., etc. And on January 17th, we booked profits on the short positions. So as you can see, this was the reversal of the position and exiting of the shorts. Now let's head over and see the real chart and the count for now. There are basically two possibilities at this point in time on the chart of Euro. The number one possibility is that from this point of reference, which is the price level around 1.04493, we have a wave one up, and this whole thing is a wave two under continuation as a flat. So in Elliott Wave terminology, the flat structure will look roughly like this. So the first leg down is called an A, and so on and so forth, B and C. So the thing worth noting here is in the C wave, which is basically this one. We are going to have 5 waves inside of it. So we will have a wave 1 here, a 2 here, 3 here, and 4 here, and 5 here. So that becomes our point of interest, because in this count, it looks like it is still progressing in 5 waves. Now it could be doing it as an impulse, but the possibility which I can see right now here is the major one is the possibility of a diagonal. Now in Elliott Wave terminology, the diagonal is a pattern which looks roughly like this. The internals are 333. I should have represented that as well, but one second. So this is roughly what you will call a diagonal pattern in Elliott Wave terminologies. It's basically sort of the same in look with the price action diagonal. The first leg down will be the 1, 2, 3, and 4, and then 5. So the basic underlying feature is that the 1 and 4, they have an overlap in price. So as you can see over here, this 4 is overlapping with 1. So basically now if we take this knowledge and apply it on the live chart, what we can see over here is that this market is already sort of doing a diagonal kind of a structure here, and you can call this as the, let's say, a dot 1 here because it's a lower degree count, and then dot 2, and then dot 3, dot 4, and then dot 5. So overall the 4 and 1 overlap is here, right? So the expectation is that this market can go a little bit lower and then take off from here if this is the right count. Now the other thing is that this is, if this is the diagonal, then it is also sort of going to be the reversal point here. So we are very near the reversal. So any shorts taken on this counter at this point in time will be very risky. The reason being that from this point onwards, the market can just shoot up like extremely fast, and you will not get a chance to get out if the market shoots up that fast after the expected diagonal pattern that we have on in mind here, right? So that's the basic underlying analysis, and let's also discuss what you call how to think of it or how to play this. Before that, I think I have some questions. I should address them. Hi, Hemang. Nice to see you again in our live broadcast. And here's the question. Do you think fifth will break the lower trend line? So even if the fifth breaks the lower trend line, it should not be very deep. It can be a little bit of a spike or stuff like. We don't want to see something like this. That would suggest that this count is not a diagonal and it's doing something else. So basically, yes, a little bit move like to 1.08, whatever this is, 1.0831 is all right. But if the market goes below it, then it will suggest that probably it's doing something else, right? That answers your question, Hemant. You're welcome. So as I was saying, we are quite near the reversal level. It is also possible the market takes off right away from here, but I'm not going to go long just yet. I have already placed alerts around, what is this? A little bit adjustments required. So this is the level 1.09083. Above this, I'll consider taking longs. Keep in mind, this alert is not a buying order. It's just an alert to alert me that the market has crossed this level, and then I'll reanalyze the move and then see if I want to take the trade from there or not. So the expectation is that the market can give small leg down and then start off the upward journey, right? So if we remove all the clutter on the right, this is our expectation. And where am I looking to consider long opportunities? Above 1.0906. So above this level, I will consider or take long opportunities seriously and look to take bullish trades. Right, so that's my take on euro for the main count. Secondary or less likely count, as I said, is that if the market sustains below 1.0831, then maybe this C is continuing, and in that case, we will have to see what's really going on. I cannot comment on things that might be going on as other possibilities become apparent, which I'm not discussing right now. So that's about it for euro. Wait and watch for bullish scenarios above 1.0906, possible diagonal in play, which can lead to a strong up leg. Right. So with that being said, let's now head over to our next chart. Crude oil. And before we discuss this chart, let's just very quickly have a look at what was being said about crude oil in our last webinar, right? So here is the recording for the last webinar on CL. Let's see what we were discussing on it. So somewhere here we were discussing crude oil. So the idea was basically just the same, right? We were discussing the same thing last time, and it's almost in the same range this time. So not much has changed, but it's our modulus operandi that we check the last analysis and then come back to the current one. So basically, the idea was that it's still propagating sideways, 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 and once it breaks the range to the upside, we will have the strong move which we are expecting since the last 2 weeks or perhaps more time, right? And I am still holding longs. As you guys already know, I was having longs in the last session as well. So let's now head over to the actual chart and see. So this was the discussion in the last session around 12th January, somewhere here. And the market after that did go a little bit lower and then up. It is still basically within this range, right? So the analysis has not changed at all. It is still within this range and still propagating sideways. And as you already know, sideways propagations can continue a lot longer than you expect. Previously, we were expecting the market to complete the whole correction here, right? And since then, that was 3rd January, and now it is it has made another low on 17th January and still not broken the range. So nothing really to update here. Most likely, maybe it will break the high, maybe still propagate. I don't have a clear answer for it, but I'm still holding the longs. I'll just move my alerts a little bit above so that in case things are not going in our direction, I will at least know. And if I need to, I might change or what do you call resize the positions. Nothing much to add here. The count remains the same, which is on screen: 1 up, 2 down, and 3 up. Those of you not much familiar with Elliott Wave, this is basically structure of an impulse. The first leg down up is called a 1. A correction in the downward direction is called a 2, and then the next leg up is called 3, which should take out the high of wave 1, which in this case is going to be around somewhere here, 74.92. But then again, the market has gone a little bit up above it. Like this too was not a regular zigzag, which you generally would expect. This was a flat correction. So in this case, we expect the market to take out this high of 76.012. So that's the minimum expectation we have at this point in time. And with that being said, I'll conclude this analysis here. There's a question or a comment from Hemang. Very chance what we say will happen that will go up. Very high chance of what you said will happen. Well, we do expect that diagonal seems to be very well in euro. This comment is basically regarding the euro discussion we had. So yeah, the chances are looking higher than normal. So yes, keep it in the watch list. Chances are always higher than normal until they are not, right? That's the way trading is. Anyways, let's move over to our next discussion of gold. Very interesting. It's literally doing the same thing it was doing when we were having our last webinar. So just to remind you guys, okay, actually let's just check the recording for the last webinar to be very clear on what we were doing. So here's the recording for the last webinar, and we were discussing gold somewhere around 26 mark. Let's see. So this was the main analysis in the last webinar. I recall very, very clearly that I was mentioning that I will look to short this market if the price does not sustain above this trend line. What I'll do is I'll just expand on this recording. Just so you know, we are looking at our last webinar recording, which was conducted on 12th of January 2024. And in that recording, the analysis basically was that if the market sustains above this red trend line, then we will look for longs. But if it comes back and could not, give closing above this trend line or take support above this trend line, basically, then we will look for sell trades. So my bias was just to wait and watch at that point in time, as we were literally at the trend line. What happened later on was that it did go lower and I was able to catch short trades as well. And we will look at that right now by first heading over to the actual chart. So this is the chart of gold, and this is the price somewhere here. We were, one second, 12th January, right? I'll just enable the counts. Yeah, 12th. Yes. So we were somewhere here when we were doing our last analysis, right? So as you can see, this is the trend line which was being discussed out there. The color was pink or red something. Here it is the white trend line. So the idea was very simple. I wanted to see sustenance either above the trend line, that the price takes support above the trend line, or could not take support and goes back in and takes resistance. So what clearly happened was the market did start to take resistance, could not sustain above the trend line, and that led to a short trade, quick scalp short trade on gold. And positional also is still, I'll discuss the whole thing once. So this is the Slack postings. As you can see, we'll consider shorts below 2023 posted on January 16th, added shorts January 17th, booked majority profits in shorts, partial left open, stop loss 2045. So that was the last update on gold. So in accordance with our analysis, which was discussed, we were able to take short trades basically, which were posted, of course, live in the Slack group. And major part, like more than 80% of it, I have already booked. Small part, less than 20%, I think even less than 10% is still open and still being traded with a stop loss. Idea still remains the same. If the market does go above this white trend line and start to take support above it, then I'll close my remaining shorts. If not, then I'll just let them continue do their thing, right? And count wise, let's look what the counts are suggesting. Let the data load up. So count wise, we have an impulse completed over here at the price level of around 2079. From there on, we have what we call a flat pattern. And a flat pattern is an Elliott Wave pattern, which basically has ABC down, one second, 3 waves down, 3 waves up, and then 5 waves down. So in this case, this first leg down is called the A wave, then the B, and then the next leg down is called the C. So if you compare it with the actual chart, we are either in the C or the C is complete here. That was basically the main theme in our last discussion as well, that either the C is already complete here and this market will just fly high from here, or that the C is still propagating downward. So same theme remains here active. Nothing new in terms of counts, right? Just revision for those of you who are attending the webinar after a gap of 2 or 3 webinars. Lastly, as we already know, in case the market does sustain above the trend line, we are not going to hold the shorts. But at the same time, I will not be taking in long trades right away. The reason for that is that this C, if it's continuing, let me just squeeze the chart a little bit. So the C wave, which we discussed, of the flat structure, if it's not here, not complete here, but rather continuing here, then it's not required for it to go down straight away, right? It can always take the complex kind of path, like this could be the one of the C, and the two may become a little bit complex. Who knows, maybe even go to 99% of the starting or the whole length of this structure, and then fall down for the three, right? So these things can and do happen. So Because of that, I will not be considering right away long trades, because the possibility of downward movement is not relegated just by the price sustaining above this trend line which we have drawn, right? This is just for me to take care of my current positions. I'll just exit at once if it sustains above it, and then replan, reanalyze, and do things that way. There is no quick trade here on the other side. That's what I'm saying. Next thing is, if it continues downward, you already know the targets will be low. First target will be lower than wave one low, which will be around 1972. And further targets, I think we have already discussed. Yes, this is the range 1937 to 1882. So big downside possibility is there. Even 1937 itself is quite a substantial move, I believe. So that's our take on gold, basically, right? Target minimum if the downward count plays out is 1974, followed by 1937, and 1880 something was the next target, I think. Yes, 1882. So that's about it for gold. We'll wait and watch, and I'll keep trailing my stop loss lower if the market sustains below this trend line, and see how things go from here. And yes, guys, at this point, I'd like to request you to hit the like button if you are enjoying the content being presented here, and also make a very quick and short request that you take some time out after the webinar is complete, and share it with at least 5 of your contacts if you have Facebook, X, or which was previously called Twitter, or Discord and Slack, or WhatsApp groups, or something like that, Telegram groups of traders. Kindly share the link for this webinar in those groups so that we can get more reviews, and we can continue doing this regularly. So we are currently on the 98th webinar. We'll soon be touching 100th. So basis on the effort, I would like to see a little bit more viewership here. And as you know, for continuing these efforts, because it can take a lot of time to come up with this analysis and present it, I also need to see some appreciation from you guys. So that's my little request. Kindly share it with at least 5 of your friends or circles or social media groups so that we can have a little bit more reach. Right. So with that being said, let's now continue towards our analysis of S&P's 500, where I do indeed have a long position on. But before discussing this chart, let's quickly check what was being said in the last webinar on S&P's 500. So this is the recording for the last webinar, and we were discussing S&P around here somewhere, right? So I recall I had taken a small long position right during the webinar itself, like before discussing S&P's count, like 1 or 2 minutes ago. I did take a long position here because one of my alerts was triggered, and the stop loss for that long position was very small. It was, I believe, somewhere around 4767. Yeah. So this is the recording for the last webinar around 4800. We had taken a long, small long, 4767 was a stop, which later was hit, and I did exit the position in loss, but I'm still long overall because the bias has not really changed. But let's see what it really is on the actual count of the actual chart. So coming with the bigger picture first. So this is our point of reference around 30th October 2023. Point of reference, by the way, is the starting point of the analysis. And from this point of reference, what we do have here is impulse completing in the upward direction, wave one completing over here, right? With the wave one being complete over here, the analysis basically becomes that we will see a correction from this point, which is the price level of 4788, which is actually the current price. And once that correction is over, which we will call a wave two, then the market should take off and fly high, right? Now, a few things can happen here, which we are going to discuss. First thing, my analysis or the reason for me taking a long right now is that one possibility is that the two is complete here. If the two is complete here, then this is just going to go up. The whole idea is based on this Elliott Wave impulse structure, which is basically a structure of 5 waves. First leg is called a 1 up, followed by a 2 down, 3 up, 4 down, and 5 up. And we, as I said, are expecting the 2 completion here. So that would mean there will be a third wave, which obviously will take out the high of wave 1, which in this case is this high of 4788. But it has to take it substantially by moving to 1:1 or 161.8 of the wave 1's length, right? So basically, if we project this length from this low, that will be a possible target. But not getting into that and coming back to our analysis on the shorter time frame, what we do have here is one is the possibility that the 2 is complete, and second is just that it's just propagating sideways and it's just a flat structure or a complex. Actually, complex is actually more likely in this case. So in which case we can just label it as an A down here and a B up here, which will then be followed by a C down before taking any upward movement. So basically, long story short, if I remove all of this, you will quickly realize that this whole thing is propagating inside this sideways range. The range is currently around 4810 to 4663. The range can have a little bit of extension to the upside. That is, the range can become a little bit like this price movement, a little bit up and then still going back and then taking off to the upside, right? So this basically is the main theme here. Propagating sideways before takeoff is the idea, right? Only time I'll be cautious or thinking that this count is not working out is if the market goes and takes out the low 4665, which is the current level. At that point, the idea that it's a sideways range will kind of become weaker because we do not expect a downside expansion at this point in time, although it is completely possible and there is a valid count for that as well. But given the idea that we are extremely bullish and the market is sustaining in the very small part of the upside range, because as you already know that wave twos generally have the tendency to give very deep retracement. So generally 50-60, so 50% of this whole range will be somewhere here. So that's what generally wave twos will retrace to. And if that idea was holding true, we would have seen something like this, a zigzag correction going and taking the market to 4480 or maybe to 4380 levels, right? However, that has not happened, which is suggestive that the market still remains bullish, still is heading for the upside. And that is why I'm considering the possibility that 2 may have already completed. Long story short, I'll hold the longs for a while, and below 4718 I'll become cautious, and strict stop loss is of course below 4667 for now, unless some new information becomes available, and in that case I'll have to consider it and change things accordingly. Now on the upside, we already have discussed some targets, I believe, in our last discussion, but let's check things anyway. We are, by the way, very near to our lifetime high level of 4820. And let's see if there's any other target. Yes, the other considered targets are 5215 followed by 5390. That's very huge. So 5215 itself is very huge. 5,000 plus targets. So nothing much to add here. That's basically our outlook on S&P's 500. Just wait and watch from here. With that being said, let's now head over to our analysis of Nifty's 50, where we had discussed a bullish point of view above the level of, let's see it on the actual chart actually. So first of all, let's have a quick look at the recording of Nifty 50's analysis as was discussed in our last webinar, right? And from there on, we will then discuss what has happened on the actual chart. So this is the analysis around 44 something. So this was the idea. I remember the main theme was that we were waiting for the outlook on S&P's 500 first of all. And on top of that, the idea was that if the market sustained above the price level of 21980, then we will look for longs or bullish activity on this counter. Now, as you can see already in the recording itself, this by the way is 97th webinars recording. We are just checking what we said last week. So this was the marked level 21980. Above this, if the market sustains, then we'll look for long trades. You can of course check the whole recording by playing this video. I'm just pausing it and pointing out because I've already checked what I said in the last webinar before we started doing this current one. Now let's look at the actual stuff. And this is the actual chart. Let's just look at this. This is the level of 21980, as you can already see, right? Purple line. And the market did sustain above it. As you can see, it actually gapped up above it, did take support on it. So it actually respected our verified level, right? And after taking support on it, it did go and make a new high and then again a new high, but could not go any further. When we discussed the analysis last time, our main idea was that this market can go much, much higher. That is, it can take out 22,000, maybe 22,200, 300, so on and so forth. Basically, super bullish view, which, by the way, we can already see has not played out at all. However, our main view that 21980, if it's support, then more bullish activity will follow, has played out, right? So overall, it's if you understood the analysis, if you have the proper knowledge, it was useful. It was useful to me in the live session. But so basically, long story short, is the analysis we discussed last time has played out, but not completely. There was no follow through to the upside, and then there was this a little bit surprisingly big, huge gap down move, right? Which is what we want to discuss right now. So now let's discuss this whole drama from this point of reference around the price level of 22,120 something level. Now, the first thing that comes to mind is what is it really doing? So for that, let's just quickly look at the higher time frame count and try to figure out what's really happening here. So on the higher time frame count, we have this as the point of reference around 27th October 2023. From this point of reference, we have a wave 1 up, a 2 down, and then I believe a 3 up over there. Yes, over there. Correction for 4 and then 5. So this is basically an impulse in Elliott Wave terminologies, an impulse pattern. Once the 5 waves to the upside are complete, then we look for a correction, and this correction has already started, is already in play, right? Now, because the correction is already in play, there's only one thing left to analyze this correction and figure out, is it going to continue further down or is it complete already, right? So let's look at this point of reference, which is the high of wave 5 around 20,120, and determine that now. Actually, 15 minutes is enough. So now this is the high of wave 5, our last point of reference. From here on, my current count is basically, I'm just counting it still as a bullish outlook. So basically, I'm assuming that from this point of reference, the minimum downside corrective structure will be a zigzag. So those of you who don't know what a zigzag is, basically is a three-way structure which looks roughly like this. The first leg down is called an A, then a correction to the upside is called a B, and then it's followed by a new leg to the downside called a C. which takes out the low of wave A. So in this particular case, we have counted this as the A, not the most pleasing looking count. I have to agree there, but with this many big gaps, there's not much you can expect. And this is the expected C. So this is the rough outlook which I could put together basis of this fast leg. So once the A down, B up, and C down is complete, there are two possibilities that exist. One is that this market will go up, right? Maybe test the wave B high or maybe go even higher than the starting point of A. So if I were to plot that here, it can go to this level or maybe even take out this level for once, right? So a lot of upside is possible. Second possibility is that's the case if it's propagating as a complex or it has already completed the correction, is heading up as an impulse. Now, the second possibility which we are going to consider as a caution here is that this does not go up, but rather it goes, one second, a little bit up as a corrective structure called an X. If it goes up as an X wave structure, then it will be later on followed by a downward movement, right? So in this case, it does not look like it's continuing as an X wave structure right now, but we have to wait and watch because this thing is not really moving in very clear pattern. A lot of gap here and a lot of volatile movements. So right now, what I'm assuming is that perhaps this whole structure down is complete. That's one possibility. If this is continuing as an X wave here and then a down leg here, then X can be taken here. And this could be the start of the down move, right? That's one thing to consider. Second thing would be that X is not complete here, but X itself is continuing maybe as a complex, maybe as a triangle, who knows, right? So basically, the long story short is we don't really know what's going to happen here. It does look like it had some upside remaining, but that was from an intraday point of view completely. Personally, I will look to take some short-term longs if I can get this market around 21,660 something. But that's again an intraday kind of thing I'm talking about. So long story short, two possibilities exist here that this market is still having more downside remaining. Second possibility is that the downside is already complete at the price level around 21285 and it can just take off from here. By the way, this level of 21285 was also a verified level. So this was the expected support level at 21350, let's say. It went a little bit lower to 21291 something. So basically 60 points lower than our expected level. So this was a expected reversal level, right? So long story short, wait and watch on Nifty 50. Both upside and downside possibilities do exist, but the downside possibility needs to be verified, and the upside possibility also, although is there, it's still not clear. And right now, the idea would be to wait and watch and take short-term trades only. The situation will actually become more clear on the Monday session, but we only do the webinars on weekends, right? So it is what it is. Can't comment much here. Wait and watch, and situation should become clear next week. Uh, s- that's yeah. Hemang is saying double zigzag. Yes, WXY basically means double zigzag. But the term WXY can also mean a complex structure, which not necessarily will be a double zigzag. But yes, in this case, I did mean that. Lastly, we'll just go over our last chart of Bitcoin. And again, guys, before moving over to our last chart, I have a small request. If you are liking the content we are discussing here, it does take a lot of time and effort to come up with all this analysis. And I would appreciate if you can hit the like button as well as share the content once it's complete. Actually, sharing the content is definitely very important because that brings us more viewership, and more viewership means more of this quality content will come your way, right? So please consider sharing it with at least 5 of your contacts, groups, or social media circles, and do not forget to hit the like button. Now let's head over to our last chart, which is a chart of Bitcoin, and see what we were discussing in the last webinar before heading over to the current actual chart. So we were discussing Bitcoin around 50-ish level, somewhere here. And this was the main theme here. The main idea, which was exceptionally clear, was that this market should break this yellow trend line. It was undoubtedly there. I remember very clearly. I discussed that once it breaks this yellow trend line, we expect one more leg down. That was the minimum expectation on this counter of Bitcoin. At least one more leg down. Or sorry, that was the second expectation. The minimum expectation was break of the yellow trend line. And if you go over there and check this recording on Bitcoin after 48 something it starts in the 97th webinar, you will see I have emphasized it and discussed the importance of this yellow trend line and why this market should break it. Now, as you can already guess, the market has broken that. So we'll just quickly look at that on the actual chart. Here is the actual chart of BTC. And not only did it break that, we were expecting like it will break and then maybe take support, giving us another sell opportunity, and then we can sell. It didn't give us any of that. It just went straight down much faster than expected, right? So what is it really doing at this point, right? We have to consider the possibilities of it heading lower as a possible impulse now because of the extreme strength it has shown in going towards the downside or going lower than the trend line. So current existing possibility I have in mind is that this is heading lower as a ABC or a 1, 2, 3, 4, 5 impulse. But if we consider the bare minimum, this is the first leg down as a 1, 2, 3, 4, 5, and we can call it an A. Correction up B, and then 1, 2, 3, 4, 5 C. So basically, those of you new here, I'm talking about a zigzag structure here, which is composed of A wave down, B wave correction up, and then C wave down. Within that zigzag, the A wave will have 5 waves inside of it, which is represented by these Roman numerals, right? Same goes for C. C wave again will have 5 waves inside of it, which is represented by these Roman numerals again, or numbers again, right? Now in this A wave, as you can already see, this is the 1, this is the 2, 3, 4, and 5 complete, right? B complete here. And the last leg down is this is the 1, this is the 2, 3. I'll remove this. And this is the 4, and we expect one more down leg here. Now this is going to be this is actually quite clear here. I'm currently avoiding small trades on BTC because of the high brokerage and charges. But if I was not, I would have definitely considered this short trade here. This is exceptionally clean. Perhaps I'll consider it after this webinar is complete, which will be a few moments from now. So basically, our idea is that at the bare minimum, very least, this market has one leg down remaining, which should at the very least take this market lower than 40607. It is currently at 40926, right? So roughly 300 points, something, it should go lower, right? That will be the bare minimum. Keep in mind, bare minimum does not mean that it cannot go further lower. It can also be, as I just said, an impulse instead of a correction, and in which case it will be 1 down, 2 up, and 3 down is the most aggressive, which can be followed by 4, or should be followed by 4, and then another leg down, right? So minimum targets we have already discussed, right? And another level of support, we have multiple here. One is coming around at 40322. Then it is coming around at 39201. So I'll leave it at that, because if it really is a 3, 1 second, if it really is a 1 down, 2 up, and 3 down, right, then it is just going to be extremely strong, and then it doesn't matter what target we discuss, it can just take it out, right? So that's about it for our discussion on what you call BTC here, and nothing much to add here. And Hemang is saying Indian market is going to work tomorrow, and I'm not sure what are you pointing to, Hemang. Is there some special session there? I haven't heard of it. Generally, they hold special sessions on budget day only, but I'll check if there is something real to it. So, anyways, that was the whole discussion, guys. I hope you enjoyed it, and thank you for staying till the end. And as I said multiple times during our webinars, if you are enjoying the content, do not forget to hit the like button, and as well as share the content with the what do you call your connections, groups, social media, etc. Full day work, maybe holiday. I'll just check what you are saying. I'm not sure. I don't really follow the news generally speaking. So yeah, but obviously this thing I have to know if it's for real. Although anyways, we'll just put an end to the discussions here, guys, and I'll see you in the next one. Take care.